Hi everyone and welcome to today's morning report with me, Richard Perry, market analyst at Handtech Markets for Wednesday the 30th of July. The European markets have started on a fairly cautious note, a little bit of downside at the moment, and that's coming with the announcement of these sanctions, these tier 3 or stage 3 sanctions that you've had against Russia that were announced yesterday by President Obama, just targeting the financial, defense and energy industries of Russia in an attempt to try and dissuade them from continuing their involvement in Ukraine. Now, investors are taking this as a fairly cautious note, and that's resulted in a little bit of downside yesterday on Wall Street, but just under 0.5% lower there. And that came despite we had some strong earnings from Merck and Pfizer out of the States. And also after hours, we had a very strong reaction to Twitter's results, which Twitter were up around about $7 billion after hours in terms of their adding on to their market cap, around 30 odd percent. So a very strong move there, and that could, I suppose, certainly drive the Nasdaq today, and that could have an impact also on the other Wall Street markets as well. So just keep an eye on those as we go today. But certainly at the moment, a little bit of downside. The dollar continues to remain strong. Not amazingly strong today. I mean, it's still on the climb, although you would say that it's not too far away now from that key 81.3 pivot level on the dollar index, 81.25. So exactly how much further upside potential it's got in this move remains to be seen, but it is approaching this key pivot resistance at 81.3 now, as this big strong move has continued. Dollar has been on an amazing run recently, dragging euro lower, cable lower, dragging dollar yen higher. So just to how much further this run has got to go before the profit taking starts to set in will be interesting, because it is not far away from a key resistance level. So again, that's one to keep in the back of your mind. In terms of what we've got out today, you've got quite a lot of data actually, especially US focused, but I'll start with Europe. You've got German CPI. That's at basically Germany announces an inflation through its regions, and then you get the cumulative figure at about 1 o'clock this afternoon. So that is set to actually come out with around 0.8%, so a slight drop from the 1% that we saw last month, and that could ultimately put a bit of pressure, you could imagine, on the Eurozone-wide HICP data that's actually announced tomorrow. So that is something that we need to bear in mind. The knock-on impact of Germany, which is certainly the driving force behind why the eurozone hasn't yet approached the deflation level, so that'll be announced tomorrow. But today we've got the Germany number, which could certainly have an impact on this. And then into the afternoon, you've got all this big US data. You start off with the ADP number. That's forecast to come in at 230,000. That could have a lead indicator for the non-farm payrolls on Friday. Certainly last month, it had a very good indicator. 280,000 non-farm payrolls were, I think it was 285 or thereabouts. So very strong indicator there for the ADP. So if it drops to 230. Again, that would be a strong payrolls number, so that would probably be considered to be another strong number from the ADP. So that's at 115. Then just 15 minutes later, you've got the advanced GDP data. Now, this is interesting. This chart shows the actual advance release that was then subsequently revised a couple of times, significantly lower. But 0.1% was the advance number last month, and that ultimately ended up being zero. So being negative 2.9% for the States, but the expectation is for 3% on an annualized basis. So that would be up at the levels that it saw back in 2013, not far off there. So that would be a very strong number. Certainly the employment data recently out of the States would suggest that we're going to get a positive number this afternoon, but these numbers are generally revised significantly, so we'll see what happens there. But certainly this afternoon, 3% on an annualized basis would be a significant improvement on GDP. So that's the data, and then into the evening, we've got the FOMC, which is expected just to do its usual $10 billion of taper, with taking $5 billion off asset purchases of mortgage-backed securities and also treasuries each, to make a cumulative 10 billion, down to 25 billion in total. So that's expected there. Not a great deal else expected out of the FOMC. There's no press conference this afternoon, so there's no and there's no revision to any targets or anything. So it could be a little bit of a muted reaction there, but we'll wait and see this afternoon. But as I said, yes, there's significant amounts affecting the dollar today, so that will affect currency markets and possibly even the both gold and silver. Silver being my chart of the day, and this silver chart is a lot cleaner than the gold chart. Gold has been quite messy in its correction, but silver's got quite a definite downtrend that's going on here. It's also completed a bit of a top pattern, you would argue, as well. You wouldn't really say that's you wouldn't really give that any real name. It's just a top pattern, in my opinion. You wouldn't say it's anything more than that, but you'd certainly say that the top pattern would imply breaking back below that 2055 mark. You'd actually say that that implies 1955 on the downside, so that's a fairly sizable correction. And also, the interesting fact is you've got now back to this 20 spot 50 mark, and I'll zoom out and show you how many times this has been used as a pivot level throughout the past year. On a consistent basis, it comes back and hits 20.5, and that's used as a pivot level. So we're back to trading around there now. You had a couple of spikes, or a spike below and then reaction back above last week, but as I said, we're back to trading around that 20.5 level. So is this a level at which now we're going to start to possibly find a bit of support? Interesting. You've got the moving averages as well, not too far away in terms of the 144, the 55 and the 89-day moving averages, all just underneath. Furthermore, you've got these momentum indicators that are actually just have unwound the overbought momentum, so it could start to be find a bit of support, and it'll be interesting. I'm watching out for that 2026 key reaction low that we saw last week. That equates to certainly on the gold price, that equates to 1291.70, which I'll talk about in a little while. So interesting if that support starts to hold, that we might start to get a bit of support once again around this 2050 level. So a couple of indicators there going on that suggest that maybe this corrective phase that we're in, despite the fact that we've completed this top pattern, I would start to look for the possibility that 2050 is a band of support that you can work with. Anyway, so looking on the intraday charts, you'll see that this correction is certainly there in the last couple of weeks, but also the fact that you've got near-term 2050 is coming in and acting as support over the last couple of days. So that is something that we need to bear in mind. That's the 2026 low, again, that I would be looking out for. So I wish you good luck in your trading on silver today, and I will speak to you later. Thank you.